Richard, first off, let's talk about the machinery orders. Looks like Japan investors are shaking it off, but better than expected. So what does this mean for recovery in one of the world's biggest economies?
Yeah, I mean, this is a lumpy series, so you really do need a big surprise to impress the markets usually. But I think it's encouraging that the economy is not going back down again. I think there's been worries that with the yen the wrong side of 80, then you may see some downward pressure on the economy. And I think particularly in this series, the big bounce in foreign orders was very encouraging because that slid quite precipitously in the last few months, and that bounced about 30% in the latest release.
Okay, so what does that mean for Japan's recovery, though? Because are we still heading for a technical recession, or pardon me, another quarter of negative growth there in that economy?
Well, the September quarter should be quite a strong quarter because you're bouncing back from obviously the extreme distress that you had in the April-June quarter. I think the concern really is that now this post-earthquake rebound has taken place. There's not much internal dynamism. The domestic economy is pretty flat, and they're talking about tax increases. And the strong yen obviously is threatening to erode export competitiveness. So it's pretty hard to see where the growth is going to come from now that this post-quake rebound is largely over.
Okay, all right. Well, let's talk about what's happening in the U.S., at least with this passage of this currency bill. What do you make of it? This was kind of expected to get through Senate, but do you think that there's any chance of it getting through the House?
No, I think this is all about domestic American politics. I don't think it's about international relations or international economics. I think it's simply that the politicians want to be able to go to the electorate next year and say, look, we've tried to protect U.S. jobs by trying to stop the currency manipulation from China. I don't think anybody seriously thinks it's going to pass. But, of course, with the markets as uncertain as they are at the moment, you really don't want even the suspicion of a trade war between the two of the largest economies in the world. So I think it's not a particularly bright idea, but you can see it's the domestic political self-interest of the U.S., as we saw with the budget negotiations, overriding any sense of greater purpose.
Okay, well, speaking of votes, what about what happened in Australia this morning with this carbon tax? This is expected once again to get through Parliament. It's going to head up to the Senate, where most political watchers say it'll get through. Do you think this will have any impact on the Australian economy itself, especially with corporates balking at it?
Yeah, it's interesting. I mean, it does imply a disadvantage, competitive disadvantage to your corporate sector if other countries are not going to follow your lead. I mean, obviously, Australia's got a moderate manufacturing sector. It's got a big mining sector. But I think really the issue is whether Europe and America are going to follow. Europe, I think, probably will, in the end, have something pretty similar to this. You know, America, the political environment is really not conducive to putting on a carbon tax. And I think, you know, generally speaking, Australia probably is going to put itself at something of a handicap internationally with this.
Okay, handicap internationally with it. That's interesting. Richard, one more question for you. You know, we got this slew of economic data coming through from the U.S. showing that there's still growth in the economy. In fact, Goldman Sachs boosting its Q3 GDP forecast. Do you think the U.S. has escaped double dip, and do you think, you know, we're still heading for a recession in Europe?
Yeah, I think the U.S. probably will escape double dip. You can see the economic data has held up pretty well. I'm a bit worried about the jobs package that they're obviously discussing at the moment. You know, we figure about half of that will get through, but if none of it gets through, then it's going to be a bit of a drag going into next year. Europe's obviously much more of a worry because you have fiscal tightening not just in the very minor economies, but in places like Italy as well. And you can see that the whole financial system instability is leading to banks trying to deleverage, shrink the balance sheets. You know, we've had that in Asia in terms of the drop in some of the financial markets here. But it must affect the business environment for Europe. So I think Europe is going to be real borderline whether it escapes recession or not. I think we're more comfortable about America.